This episode of the Old Dogs REI Network is brought to you by Mino Studio. Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Hello, old dogs, and welcome to
Fun Facts Friday.
This is our once-a-week, only on Friday show, where we have special episodes not featuring guests, where I will share tricks, tips, terminology, and techniques that will help skyrocket you to real estate investing success. Today's topic is why it's better to invest in real estate after 50. Well, before we get started on this very interesting topic, we like to touch base with you guys just to encourage you and offer you some little tips here and there that might help you in your real estate investing. I hope everything's going good. Boy, I'll tell you, you got to just keep moving forward. I just had a property under contract. I'll talk about it maybe in the later episode here. But, you get a property on a contract, you can go and inspection and do all this stuff. And then when you find out it's not the right property, it's kind of, a bummer. But hey, it's better to find out before you close that deal and sign those escrow papers. And that I'll talk about later. But hey, little tip for today is about rent. What do you charge for rent? Okay, now we use a lot of different things. I use a rentometer or rentometer. I don't know really the proper way to say it, but great. It's a great product, great company. They give you an idea of what other properties, similar properties, same number of bedrooms, same number of the square footage or what have you. You can get a good idea of what rents are. You can do your own area comps, literally call other rental properties in the area to find out what they're renting for. Try to get all these ideas. A lot of people just rely, for example, on their property managers to help them set the rent price. A lot of different ways to do it, and they all are good, and they all have their property, but we can also find ourselves restricted, and we don't necessarily have to be restricted. And by that, I mean, we can sometimes either get some bad advice or we find data that's not necessarily true, okay? But you can also ask whatever you want for your rent for that property. And just to give you, an idea, I've had property managers, for example, that just, they wanted the easy way. Now you got to think sometimes, and I'm not putting property managers down because, I know that it's a hard job. I mean, some of these guys, they have hundreds of properties they have to get renters for. Okay. So, they just can't always give you the kind of attention that you could do on your own, right? And so it's easier to have cheaper rents, you get more prospects, and you find a renter quicker, and boom, turnover tends to be frequent sometimes. It depends on the property, but you can also get involved in that project too. They don't have to do everything. You can get involved in trying to find your own renters, but it does take more time and effort. But the bottom line is that you can charge what you want, and so much has to do with the positioning of that property. And you need to really take a look at what is your ideal tenant and what do they want? Ask yourself, would I live in that place? And if not, why not? And what would it need? And just start looking at these things and looking, are there things that you can do to make your property more desirable for the type of renter that you're looking for. That's why we launched in this whole stealth tenant marketing thing that we've mentioned in previous episodes. And you could do a search on our website to find out more information on what that is. But basically, we proactively go after and find those tenants and almost drag them in the door and say, look at this place. Wouldn't you love to stay here? No, we don't really do that. But you're doing that with your marketing, though. You're drawing them in and you're showing them something that's really good. We recently increased our rents from $450 to $675, and that's crazy. But we're getting people that are renting the same property we've been renting for at $450 for $675, a huge jump. And the reason we did that is because we could, and we maybe spruced up the actual units to look a little bit nicer and so forth, and added a few amenities, some light things, but really it wasn't that difficult. And we found the people that were willing to rent at that. And sometimes I think that the real key here is that don't underestimate yourself. Don't underestimate the property. Don't underestimate what you might be able to get for rent. Sometimes you just have to try, and you may have to get involved in the process. Your typical methodology with your property manager may not work. But that's just the tip for today. Okay, try to get the rents that you deserve on your property. Okay, on to our topic. Why it's better to invest in real estate after 50. Now, I know that that's probably throwing you a curve. What do you mean better? Wouldn't it be better to actually be younger and get involved in real estate investing? You have a lot more time to develop and grow your portfolio and so forth. Well, first off, for all you young pups listening out there, this isn't going to exclude you. This discussion, if anything, will give you some good, solid stuff that you can hold on to as well, that I think is an advantage that 50-plussers, those people that are 50 years of age and older, have, okay, in becoming a real estate investor later in life, okay? So some people, may look at it, oh, well, it's a last-ditch effort. I don't have the funds that I really wanted to have for my retirement, or, gosh, I don't have anything for my retirement. I've got to do this. People look at it as a last-ditch effort or an act of desperation. And really, the reality is this is the best time to start investing in real estate for those that are 50 years of age and older. Okay, I started when I was 58, okay? So think of all these entrepreneurs, though, in their 20s and 30s. In fact, I had a guest on, and you'll probably hear that podcast if you look back a few episodes. But, I was talking to him, well, what advice do you have for I always ask, what's advice for some of our listeners? And he said, what do you mean? I mean, I'm looking, and he was in his early 30s, and he's saying, I'm looking to be able to generate enough income that I can retire in 5 or 10 years. What's the difference between me doing that and you doing that? Well, I'm going to tell you what the difference is. In fact, there are 15 things that we have, reasons why people over 50 have an advantage in real estate investing. That's right. Okay, I'm going to try and pop them up. That's 15 things. I'm going to try and do this so that it doesn't get to be too long of a podcast here, but there's a lot of good stuff here, okay? And number one, financial experience. Okay, somebody just out of college or newly working, okay, they don't have the depth of experience you have paying bills, paying things like property tax and homeowners insurance and household budgets and healthcare and borrowing money and managing assets. I mean, they're just starting out, so they don't really have that advantage up front. Okay, that's number one. Number two, we have more life experience. Okay, so life experience gives you things like street smarts and just good intuition about whether or not something's a good deal or not a good deal. Dealing with businesses and government entities and there's just we've also made a lot of poor decisions, and we've learned from those poor decisions. It's just life experience, but we've got more of it, and we apply that now to real estate investing, and it gives us an advantage. I'd say most people over 50, I'm not saying all, but I would say most people over 50 had at least one experience purchasing a house, okay, or a condo or a townhome or a vacation home or a manufactured home. But we have actually gone through that real estate process. Somebody fresh, in their 20s, maybe even in their 30s, haven't purchased that first house yet. Well, we've done that, been there, done that, learned from it. We know what it's like to apply for a mortgage loan and to make mortgage payments and to deal with home issues like plumbing and electrical and broken water heaters and ACs, DCs, ACs, DCs. Thinking rock and roll here. Okay, no. Heaters, air conditioners, landscaping, maintenance, all that stuff, right? Those are things that we, naturally take with us. Okay, number 4, here it is. Most people over 50 have kids. Now, this one's actually kind of funny. You may be laughing at with this one, but most of us over 50, our kids are grown up and out of the house, right? Okay. Okay, well, I can hear some people laughing in the background. Yeah, I wish, but no. I mean, we, generally, we may have kids that, a few stragglers here and there, but, we pretty much are free to make decisions about what we're going to do with our house, for example, or whether or not we're going to still keep the house, right? Number 5, most of us, or have sort of either we're ending or we're already past that major wage earning years, okay? And some of them may say, why is that an advantage? Well, I'll tell you. If I've worked on the corporate side and I've seen the rat race and the office politics and all the other, jockeying for position and having to sacrifice time with family because your boss is demanding you this and da-da-da-da-da. Well, we're kind of past that stage. Not that we're cynical or anything like that, but even if you're working and you're sort of the latter years of your job, you're winding down. You're starting to focus more on your future. And so there's an advantage to that. You kind of have a freedom where a little bit more freedom, at least in your focus. Okay. Also, number 6, most of us have already built up some sort of assets. We either have money that we've been saving, maybe we've got an IRA or 401k or some sort of pension or savings. We probably have homes and we have equity in our homes. We have money to invest. We've got a little bit of a jump on those guys that are just fresh out of college or only been in the working realm for a short period of time. Number 7, we have established long-term relationships, longer term than your younger people, because we have, either grown up with people, we have a network of friends, business associates, relatives, other people that, hey, they may join you in your effort. Maybe they'll partner with you, or maybe they'll invest in what you're doing. But we do have the advantage of having those long-term relationships. Number 8, usually we have more investing experience than the average sort of college grad or millennial. We've been buying stocks and bonds and annuities and money market funds, and we know what good investments are and what bad investments are. We've seen bad times and good times, and we've learned a lot from that, and we kind of know what works and what doesn't. So as an investor, which is a real estate investor, right? Investor, however you might want to put that. But we do have a good idea on what's a good investment and what's not. So that's an advantage. Number 9, okay, we do have a shorter time period in which to grow and build this real estate portfolio. And some of you may say, well, that's a positive. I mean, come on, you're closer to the grave. No. Okay. Just kidding there. That's no, but what I'm saying here is that there's an advantage to that. And I'll tell you what it is. Okay. We don't want to waste time on foolish things is kind of the deal here. We don't want to take chances. We don't want to risk things that we shouldn't risk. We don't want to get tied up in long-term commitments on a financial endeavor. We want to make some good decisions, some short decisions here, okay, and be able to do what is right. So sometimes we're going to be a little bit more sound and conservative in our decisions. We may take on a mentor because we don't want to risk making a bad decision. So that's an advantage, I think, is really having that shorter time frame. And 10, which is kind of like 9, is we're just less likely to take risks. When you're younger, you're kind of free, easy, you kind of have less to lose on the other hand too, but you'll go for those, hey, I'm going to get involved in, puts and calls and all this stuff. And you're going to invest in things that might be a little higher risk, but we're probably less likely to do that without really doing the research and knowing what we're doing. Another reality of being a 50-pluser is you generally have less expenses than somebody that's fresh out of college. They've got student loans. They've got, and those they're going to pay for a long time. We've got that stuff paid off. In many cases, our homes are paid off. Our cars are paid off. We have money in savings, and we got money to put into savings. So expenses are a lot less. We also have less commitments. When you get your kids get older and move out or move on, or maybe they're still hanging out. But nonetheless, you don't have the soccer games and the sports events you have to go to, running kids around, shuffling them from one place to next. Hopefully they already have their own car, and they're able to move places on their own. But there are less commitments. Number 13, it's easier to downsize or minimalize, and I only mentioned this one because that's kind of a smart approach when you move into real estate investing, is to really just to simplify things so that you have the freedom, to do things that you want to do a little differently. For example, you got this big house and it was great when you had kids in there and all this other stuff, but now, you're the repairs, the property taxes, all these things are just kind of like, I'm done with this big house, and it's this big, huge chunk of equity too, that you can do what you want with it. I mean, you can make your life simple, by, maybe selling that house, even moving in and doing your first investment to be a house hack. You could move into the fourth unit on a quad, for example. And, that's how you get started. And you can kind of keep doing that for a little bit until you build up your portfolio, but you have the freedom to do that, right? Because you can minimalize a little bit, and you can move to other states or other countries. You have that kind of freedom to do that stuff. So, granted, a lot of us, we want to be close to our kids and grandkids, and totally get that. That's why I'm in California. That's about the only reason I'm in California. But hey, you do have the choice. You could go either way. Number 14, more time and freedom. Once you retire, so this is more, I'd say, for the guys that are, and gals out there that are already retired, you really got nothing but time here. And you can choose to not work at all and just play, or you can choose to work a little if you want, or as much or as little as you choose, right? It's your choice. You have time to learn something new, to read, watch YouTube, attend webinars, seminars, boot camps, conferences. You can go back to school. You can do a lot of things to sort of give you the skill set that you need to be a good investor. You have more time to research markets and properties, to even manage investments and deal with contractors and property managers and so forth. You also, have time to network. I mean, you can go to Chamber of Commerce meetings. You can go to the Kiwanis Club meeting. You can go to REI meetings or real estate investor meetings or meetups. You can meet people for lunch, meet people through Bigger Pockets and meet them for lunch and talk real estate investing and start, building up your network and building your knowledge base up. You can meet with bankers. Who would ever want to do that? But hey, you meet with bankers and you make some good contacts. They can be a great resource for you later on. You can also start meeting with other investors and picking their brains and spending time learning more, maybe even finding potential partners. Final thing is number 15, you can design a real estate business that runs itself. You have that option. You don't have to jump in head over heels and move into another full-time job. If you're smart, you're going to, no, not to say that people that are doing that are not smart, but hey, if you really want to be able to create freedom, we talk about financial freedom, but we're also talking about the freedom to do the things that you want to do. You set up your business from the beginning on your own set of rules, right? You could actually live what that book so many of our guests talk about, the 4-hour work week. Right? You can just basically have 4 hours designated a week to deal with your real estate stuff, and you set it up to run itself, right? You can do that with virtual assistants. You can do that with good property managers and other people that are working for you, and you can manage them and manage others to manage them as well. So you can spend almost no time making your business work. It's up to you, so that you have that extra time to travel, spend time with family, grandkids, play your favorite sports, whatever it may be, golf or tennis or whatever, your favorite hobby. And you can enjoy this thing called your golden years, and I've kind of referenced that in previous shows, but the golden years can be literal gold. You really are generating gold here if you can get your real estate business up and going, so that your golden years will be something where you don't have to worry about whether or not you can make ends meet, or you're going to have the funds for the longevity, or whether at some point you'd need assisted living or you'd have major medical bills. It won't be an issue, because you've set up a wonderful little enterprise, so to speak, here that can help fund those retirement years and also be that legacy that you can hand down to your kids after you're gone. So what's the point of all this? I mean, why did I even bring this up? Really, because I talk to a lot of people all the time. And one thing that I find is that many people will say, well, I guess, I'm going to have to do something here, so I might as well do real estate. Hey, you're over 50. You've got an advantage in doing real estate right now. You really do. And I've got nothing to sell. I'm not selling boot camps or anything, or coaching. I don't do any of that stuff. I'm just telling you, this can be a great opportunity. You may have a lot of skills that you already have developed over time here that you can use to be successful in real estate investing. So that's it for today, guys. Please note everything I presented here, and I will have all these 15 items listed in our show notes on the Old Dogs website at olddogsreinetwork.com/blog. Look for the episode entitled Why It's Better to Invest in Real Estate After 50. So until next time, remember, cash flow is king and real estate investing the means. Thanks again for listening, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.